Hello and welcome to a brief mid-year market update from the Schroders Global Sustainable Growth team. The first half of this year was in marked contrast to 2022, with growth stocks very much back in vogue. This sharp reversal is much like what we have seen since the start of the COVID pandemic in 2020. The market has had to contend with an economy lurching from one extreme to another through lockdowns, reopenings, supply chain blockages, and unprecedented stimulus. This has created a very challenging backdrop for investors. So far in 2023, we have benefited from two key features of our investment approach. The first has been our holistic and inclusive view of sustainability factors. We've been able to identify attractive companies across different sectors, regions, and styles, allowing us flexibility to adapt to different phases in the market. Secondly, at an individual company level, the strong stakeholder relationships shown by our investments have allowed them to navigate this challenging environment better than most. The two most important external drivers that we will remain focused on during the second half of this year are inflation and geopolitics. While inflation is on a declining trajectory, there is still considerable tightness in labour markets worldwide, which means it is unlikely to fall all the way to targeted levels. On the geopolitical front, the continued war in Ukraine are top of mind. While the outcome of both these situations is highly uncertain, what is clear is that governments and companies are rethinking their supply chains and investing in more local production, which in itself creates opportunities. We have seen time and time again over these turbulent years that companies that have strong relationships across their stakeholders have outperformed their peers operationally. Take suppliers. In normal times, all customers can get access to components, but when supplies are constrained, vendors naturally favour the customers with whom they have good relationships, allowing those companies to continue to fulfil their orders. This may only be financially relevant every few years, but it underlines the importance of understanding a company's approach across all stakeholders. Quality companies that are run for the long term, taking into account their impact on all of their stakeholders, not just their shareholders, are likely to be more resilient within challenging market environments. They are likely to experience lower downside risk due to the lower risk of operational disruptions. We have long argued that companies do not operate in a vacuum. Never has this felt more true.